Hey, good morning, everyone. Marty Mazura here, October 11, 2019. Run through a chart or two with you, talk about the news of the morning, of the week as well, and uh, and then let you get on with your morning. I'm going to be doing all of our weekend research this morning, updating our index and putting the finishing touches on our weekly message. And I'm really going to want you to read this one this week, folks. In somewhat summary form, I want to really dig a little deeper into our thesis and tell you what we're thinking going forward and why. And I'm thinking I'm going to offer up just a slew of charts for you to click through. Some of them will be data that is part of our index, some of it not. I'm going to pull it from a file that I've titled Charts That Trouble Me. And just kind of, again, give you a feel for why we think when we get below the surface, there's enough there to keep us notably defensive guarded, however you want to put that, at least for the foreseeable future. So anyway, so look for that, and please do read that this week. Okay, speaking of weekly messages, last week I closed with this. Keep in mind that while my base case is presently that the next big move in the market is likely to be lower, I've maintained that a push to fresh highs in the meantime is very much in the cards as well. Catalysts for new highs sooner than later would be good news out of next week's trade talks, and that's where we are right now. We'll talk about that in a second. Dovish Fed commentary. Yeah, I'd say for the most part, we've been getting that. We've gotten a bit of Fed commentary this week. Dovish would mean, very willing to stimulate, actively stimulating, or so forth and so forth. I would say definitely willing, no question about it. The Fed is very concerned about the current state of conditions, particularly the Texas Fed governor who spoke yesterday. Jerome Powell and the rest of them, they at the same time, I should say, they're a bit sanguine about what's going on. More so than we are, or more so than I am for sure. But yeah, I'd say on balance, the Fed commentary has been dovish. Q3 earnings reports. Really, it's the outlooks we're going to be looking at. Of course, that remains to be seen. There's going to be a lot that we'll bring you on that in the next few weeks. I do want to add that this morning we're seeing a big rally in the futures markets. We saw a bit of a rally overnight, but earlier in the session last night, we were about a third as high as we are now. I think, and we're not seeing much of this in the headlines this morning, but I think it's largely about good news on Brexit. Yesterday, the Irish leader and Boris Johnson met, and apparently they had very constructive talks about how to deal with the Irish border, and that's really the big sticking point. And this morning, the news out of the European Union is they've had very constructive talks on Brexit as well. So suddenly that narrative is another one that's flipped almost completely from where we are just a week ago. And the world seems to be believing, you can sure see it in the pound versus the dollar this morning, that maybe a Brexit deal is coming. Now, folks, if you look at a Brexit deal, I mean, a legitimate Brexit deal where there's a trade deal between European Union and Great Britain, versus what the US and China are about to agree to today. Really, while the market is responding to the China news, and that's certainly what the headlines are going to be all about today, the more consequential, fundamental development that is good is actually the Brexit news, frankly, in terms of long-term, sustainable impact for the markets. A China-US trade deal that's some sort of a currency pact that won't be formal, can't be, to get some ag purchases, which of course we'll take, and the alleviation of a 5% increase on tariffs that would have come into play next week, that doesn't really do much in the grander economic scheme, because the damage that's been done really thus far, certainly uncertainty for escalation is there, and that's hurting sentiment. But the real on the ground damage has been the existing tariffs and the uprooting of supply chains and all this motion that's been going on that's been inspired by nothing but policy, not inspired by opportunity or gains in productivity and so forth. So um, again, I don't mean to throw cold water on today's happy news for the market, but this is what I just basically suggested, and this is part and parcel to my short-term thesis, or one of them, is that we mount to new all-time highs before we ultimately roll over into what is potentially a pretty ugly stock market. That is what probabilities are screaming at us right now, but that doesn't mean it has to play out that way. The Brexit development is good, legitimate good news. We need much, much, much more of that, and a real reversal of what we're seeing under the surface if we're going to get a meaningful extension of this economic expansion in this bull market. So anyway, I'll stop there with the rambling. Read the weekly message, please, when it comes out, probably later this afternoon, at the latest tomorrow morning. Okay, so you're looking at the hourly chart, the 1 hour chart. That's what each bar is for the S&P 500 futures contract. I believe it was yesterday I pointed to this. If I didn't, I should have this downward trend line. Breaking through that this morning is bullish. We had these nice bullish looking divergences. You see how we had the market lower, we had the MACD higher, we had the RSI higher. So on a short-term chart, that's bullish, and that was suggesting that the momentum, or that the odds favored that we would get a push through this downward sloping trend line. So now we have a breakout. If that breakout holds, then that could lead to bigger and better things and get us to that marginal new high. If it doesn't and it breaks down, it's yet another failed bullish breakout. That's bad news, and so we'll see how that plays out. We're seeing a little bit of, just a little bit of here in the last couple hours, a little bit of a downturn. So I think traders probably should have high expectations. This, we could see a nice thrust in the pre-market. When the cash session begins, unless there's some news out in the meantime, we could see some retail money come rushing in, and then we'll just see the rest of the day and see how it unfolds. But it wouldn't surprise me to have a really big update today, but nothing would surprise me either. It could be that we get the details of this deal and it's downplayed. It really can't be much in terms of meaningful long-term stuff unless existing tariffs go away, but that deal is not going to happen without a meeting between the president and President Xi. So we won't get, a big, huge long-term deal, but it looks like we may get something along the lines of incremental. If the news that this is just the beginning of something really, really big, and then of course we have to deal with everything that comes out between now and then. So anyway, I'll say it again, don't want to pour cold water on it, but yeah, it's good news right now. So, so here you have, again, positive divergences right here. You want to see this. The bulls want to see these momentum indicators break these other trends. But this right here is, a bullish divergence from here to here. So this is a positive look on the short-term chart. Zooming in a little closer on the 1 minute chart for real short-term traders. Not as good a look, so that calls into question, at least right here in the pre-market, what we're going to be looking at today. So here you have, a higher high, here you have a lower low. So for what it's worth, if you're concerned about what may happen today, if I have a viewer out there who's trading this thing, well, right now you'd want to be cautious. You'd want to set your, if you go in here thinking that something big's going to happen, I don't know, I'd probably set my stops fairly tight today. And then going the other direction, zooming out on the daily chart, we have this, remember we have this August, that stubborn consolidation area or trading range that we lived in here. And then, here we are breaking through it once again. Looked like a failed breakout, right? Very ugly, but here we are coming right back through it and breaking through there again. You can see what kind of resistance this continues to be. And by the way, this level right here is substantially more meaningful than what went on just in August and what's going on right now. Look at here. This is the level that we could not get past all the way back to over a year ago, September of 2018. Right in here on September 10th, right before we began to roll over, I wrote an article, expect a rough patch. Right in here, I wrote another one, continue to expect a rough patch. You can see what was going on down here in these indicators. We got more than what I anticipated, as I've illustrated for you here before. But look how these momentum indicators looked before we got this big rough patch. Look what they look like here, right? Look what they look like here, okay, on the daily chart, right? And look what they look like, here on this recent swoon that we've had in here as well. And then we have these longer term, really ugly looking divergences, folks. And as I've illustrated for you in the longer term charts, this is the look, when you have these upward sloping wedge patterns, this is the look of big corrections and potential bear markets, simply on a technical, how the market is trading basis. Fundamentally, we have issues that confirm that while we're living in this kind of look, we should remain very cautious. And I still think look for a penetration of this. I'm not guaranteeing anything. I think ultimately, based on everything I see, really good chance that we do roll over into something deeper on the downside. But we're open to all possibilities, and I'll keep you updated on our thinking all along the way. Right now, though, if we get to, we get a big rush up on today's news and so on, we get to a marginal new high, it's just going to be what some traders call a divergent high, because it is in no way, shape, or form going to take out these longer term negative divergences. Actually, it's just going to basically, make them look worse. So stay tuned, and we will definitely keep you posted. Again, look for this week's weekly message for a little deeper dive into why we think the things we think right now. And we'll talk to you again soon. Have a wonderful day. Have a wonderful weekend. Thanks again for watching and listening. Bye-bye.